Hey guys, so the Federal Reserve's interest rate decisions have a significant impact on various aspects of the economy, including the stock market and retirement funds and the real estate market. So in recent times, the Fed has raised interest rates, including today, by 0.25%, with the Fed fund rate increasing to 5.0%. Now this marks a significant increase from the 0 to 0.25% interest rates that were not long ago, all right? So my name's Rock Daniels. I am the Bluegrass Realtor. Take a second, hit that subscribe button so that you and I can stay connected. Now, the Federal Reserve's strategy is to increase interest rates in order to fight off this inflation. Now, by doing so, the central bank hopes to really slow down the economy, which in turn would reduce the demand and bring down the inflation rate. Now, the Fed's updated economic projections indicate that the peak interest rate is going to reach about 5.25%. However, the recent banking collapses have led to a change in sentiment, and the market no longer expects interest rates to rise to 5.75%. Now, higher interest rates have made it challenging for the banking sector, which have become accustomed to those 0% interest rate environments. Now, banks can no longer get away with paying 0% interest to retain their customers' money in savings accounts and CDs. Haven't thought about that one. Now, additionally, if banks want to borrow money, it has become much more expensive as the cost of capital has gone up dramatically. Now, the impact of rising interest rates on the economy is yet to be fully realized, and the official data will not be available until later on this year. However, there is an expectation that GDP will slow down. The degree to which it slows down is unknown, but opinions are divided between a soft landing, a crash landing, or even a dull landing. Unemployment is also expected to rise, hopefully, because it will help, with the Federal Reserve reiterating that the labor market is still tight, contributing to wage inflation. However, the higher interest rate environment is expected to lead to a softening in the labor market, with unemployment expected to enter the 4% range this year. This would result in 2 million Americans losing their jobs. The housing market is another sector that is sensitive to interest rates, and the expectation is that mortgage interest rates will remain elevated. Now, the 30-year fixed mortgage rate, and it's been floating right there at 6 to 7% in that range. And there is no expectation to see it return down to that 3% anytime soon. Now, the relief, it's expected in the last few months of 2023. Now, the stock market is also sensitive to interest rates, and the effects of rising interest rates are complex. When interest rates rise, borrowing costs increase, making it more expensive for companies to borrow money. This can lead to a decrease in earnings and profitability, which can cause stock prices to fall. Now, on the other hand, rising interest rates can be a sign of a strong economy, leading to higher stock prices. Therefore, the effects of these rising interest rates on the stock market, they're not really that straightforward. However, today, we saw that the Dow Jones dropped 500 points immediately after the Fed said, we're raising the interest rate. Go figure. So higher interest rates can also have a significant impact on retirement funds to all you retirees, such as like your 401ks. Now, higher interest rates can cause bond prices to fall, leading to losses in the bond funds. However, higher interest rates can also lead to higher yields, resulting in increased income for those invested in bond funds. So, in conclusion, the Federal Reserve's interest rate decisions have far-reaching implications for various aspects of our economy. Now, the recent increase in interest rates has had a significant impact on the banking and the housing sectors, and the effects on the economy as a whole are yet to be realized, all right? So the impact on the stock market and retirement funds is also very complex. Now, with both positive and negative effects, these are going to be very crucial. Now, therefore, it is so crucial to keep a close eye on what the Federal Reserve is going to do with their interest rates, all right, and their decisions they're going to make and what implications they're going to have on our economy. Now, remember, guys, who am I? Rock Daniels, the Bluegrass Realtor. Take a moment, hit that subscribe button so that you and I can stay connected. Thank you so much for stopping by. I look forward to seeing you here again soon, right here from Lexington, Kentucky. See you guys.